Welcome to this first of two very special episodes of the AlphaMind podcast. We're delighted to have someone who has been very well known in the trading space, very influential to many other traders, and who has been around for, well, over 5 decades in the markets. His name is Peter Brandt. He is a legend of the markets. He was featured in Jack Schwager's most recent Market Wizards book, Unknown Market Wizards, and he has never been shy about sharing his thoughts and his reflections and his insights on markets on his social media pages. So we were deeply honoured when he informed us that he would like to spend some time talking to us on the AlphaMind podcast. We have therefore decided to, we had a great chat which lasted pushing close to 2 hours, and it was full of richness, and we took a different track to perhaps how we normally engage with a guest, and we also took that for the reason that, you know, Peter's done many fine interviews over the years, including a recent brilliant interview with Riz Iqbal on the Words of Wisdom podcast. And our tack that we took was to engage more in a discussion and a dialogue, an open dialogue with three of us, myself, Mark. Both of us have, you know, multiple decades in the markets, coming from slightly different angles, and then Peter. So really what you get is you basically get the expressions and wisdoms of 3 people talking about markets and tradings with collectively probably 130 odd years of market experience. 3 baby boomers, early and late stage baby boomers, of course. So we might have slightly different perspectives to some of the younger ones here, but we do nonetheless hope that you can get something from this. Markets don't change. The tools, the systems, the methods, they may evolve and adapt, and of course conditions adapt, but markets and the way people are in markets remain the same, and that's really what we want you to perhaps get from this. Perhaps, you know, that there is a sense that, you know, I think we all have it when we're older, that we wish we'd have known what we know now 20, 30 years ago, when perhaps we were a little bit more courageous, more risk tolerant, more, you know, closer to starting out. And in a way, we hope perhaps we can catalyse some of that experience for you so that you have that at an earlier stage in your trading careers. Anyway, at the very minimum, we hope to give you some useful food for thought. So, as I said, this first episode is half the interview. It's about 50 minutes long. I do hope you enjoy it, and we do hope you get something from it. And yeah, we're ready to go. We just want a quick thank you to our podcast sponsor, the Society of Technical Analysts, the brilliant STA, who provide outstanding services for their members. Do look at joining them. They are open to members worldwide, even though they're UK based. They're the world's oldest trading technical analysis body. Started even before Peter started in the markets, and they provide, like we said, brilliant educational services, including their fantastic home study course, which has been created by some of the world's leading experts in market price action methods, technical analysis. And you can find out about that by going to our website, alpha-mind.net, where you can, if you go through us, you can get a small discount on the price of that service, or you can find out more about it by going to their website, technicalanalysts.com. Now, on with this week's podcast.
Well, welcome to this week's AlphaMind podcast, and we're delighted to have Peter Brandt with us, and that might trigger all sorts of flags for many of you out there. One of the unknown market wizards that perhaps is a lot more known now since he's been in that book, and I think you've got 750,000 ex-followers and a real reputation in the market because he says it as it is, and huge career going back many decades. I won't disclose his age yet. Perhaps we'll get onto that as we go through the podcast, as we maintain our vanity. But we're delighted to have Peter on because, you know, and we've not got a real set agenda for this particular conversation because we want to dip in and out of some of the themes, get different perspectives from Steve, myself, and Peter. But perhaps I'm going to start off, if you don't mind, with a question, Pete. So welcome to the show, and so delighted to have you here. But when Steve, you and myself started trading back in the, sort of late 70s, early 80s, life was a bit more simple then. It was, we were doing charts manually, point and figure on pencil and graph paper. There weren't too many sources of information out there. You read FT, Wall Street Journal, Herald Tribune. You might have had a Reuters screen. If you're lucky, you had a Telerate. But kind of life was simple then. And it seemed like if you wanted to get into trading, well, you had to go into get into a business and start from the ground zero. And suddenly the world nowadays is that, well, that's all turned on its head. Anyone can be a trader, and whatever that means in this world of trading. So I'm sure there's some stuff that looks like trading but isn't. And there's so many things going on. So if you were to be starting now, Peter, how on earth would you be looking at getting into trading? What would be your mindset about approaching the dilemma of entering the market now and the challenges of that?
Oh, there's a lot of ways to go with that question, but thanks for asking it, Mark. And hey, Steve and Mark, thanks for having an old codger like me on. Yeah, I mean, back then there was only one way. You opened a retail account, you deposited whatever amount of money they wanted, and you, for the most part, you looked at Telerate. That's where you got your quotes, or you had quotes. And I had CQG back then when it first came out. That was a Cadillac. But you didn't have all of these computerized charts. We, as you know, Mark, Stephen, we started with a blank piece of chart paper and wrote a name up in the top, December oats, and put a price scale on and put dates on, and got a number 2 big pen and a clear ruler, and you start from there. And or if you wanted to splurge, you'd go down and buy a CRB printed chart, which were about the size of a quarter of a sheet of paper for each chart, and you keep that up for a month, and then you go buy a new chart book. And we didn't have a computer chart. I mean, I remember when we first were able to print out charts off of our computer. That probably was 78, maybe 79, and they were printed out on that glossy paper. Remember the fax paper, crummy fax paper that would curled up? That's how they printed out the charts, was on that silky paper. But there were no indicators, so to speak, back then. Indicators were just kind of being invented and written upon, and with moving averages and line chart. We didn't have candle charts. There weren't even candlestick charts back then. They were all line charts. And I love the grain markets because I didn't really have to go to work until 8:30 in the morning and do out trades, and I was done at 1:15. Now I guess they extended the close to 1:20. My goodness, 5 minutes later. They're stealing golf timer away from these CME members, I guess. But yeah, it was a pretty simple life. There weren't all of these markets. Now I trade 50 different futures markets. Back then it might have been 6 or 7. And so but that's how we did it. You put $10,000 in with a broker and pay $40 round turn commission per contract, and trade a few lots, and you blow your account up, and then start a new account. While you learned, and you just had to there weren't a lot of chartists even back then, if you guys remember. I mean, most everybody were fundamentalists, and the people I knew at the Board of Trade were all bid-ask spread traders for the most part. I mean, guys, you'd meet a chartist, and it was almost like running into a blonde-haired, blue-eyed, left-handed guy in Kenya, Africa, you go, whoa, we look alike, right? I mean, there just weren't that many. And so there were a few books out, of course, Edwards and McGee being one, the big one. And, there were a few books then starting to be written at the time. But yeah, it was a lot simpler life.
Thank you for that, Peter. And may I just say on my behalf, welcome to the AlphaMind podcast. It's a pleasure to have you on. We've been hoping to have you on for so many years. And of course, you've become an inspiration to many and fully deserved your place in Jack Schrager's most recent book, Unknown Market Wizards. And you were the opening chapter in it, and I really enjoyed that. I think the title he gave your piece was Strong Opinions Weakly Held.
Yeah, I think that's what it was. That was Jack's kind of buzz theme on it.
But I thought that that's such a powerful phrase and really captures one of the challenges of doing this job. The ability to both have strong opinions, which you need to form sometimes in order to take trades, take risks, and then to be able to just let them go, as if rather than allow yourself to become married to them, which is where a lot of the great traders that I've met just seem to master that ability to, this is the greatest trade ever, and then it doesn't work. I've moved on from that. Whereas so many people get caught up in that. I've got to make it work. Otherwise I look stupid. I mean, what is your view on that phrase?
Let me give you an example. Last fall was really starting to zero in on the Nikkei Dow, and I trade that either at the CME or I traded in Osaka. Japan has a contract. Singapore also has a contract of the Nikkei Dow. But starting in October for a number of months, I was just zeroed in on the idea that this was going to be a big trade for me, and it was going to be a trade that I was going to be taking on the long side, that I would be buying Nikkei futures, and I was dug in on that and wrote about it, posted charts on it on Twitter, October, November, December, January, into February, that get ready, we're going to have a ride on our hands. My most profitable trade so far in 2025 has been short the Nikkei. And I pretty much turned on a dime. And so after waiting, and I didn't get long Nikkei during that period. I was waiting for a breakout in the charts. And so I had open order buy stops in, and I was ready to get in, and I was all eager for the trade. And I really felt like this is going to be one of my big trades of the year. And yet we came in here into the third and fourth week of February, and I changed my mind and flipped it completely. And I'm not in the trade anymore. But my most profitable single trade so far in 2025 is short the market that I had been biting at the bit for to be long for 4 months. So I guess to me, that's strong opinions weakly held, that when I'm looking at a trade, when I'm anticipating a trade, when I first enter a trade, I want to have the conviction for the trade so that I don't get spooked out with every little wiggle of its tail. But I want those strong opinions to be weakly held so that I can abandon them quickly if need to be, and that I don't become dogmatic. I don't like to become dogmatic about a trade or a position. I want to try to remain agnostic, but yet with an opinion, with a plan, but at all times agnostic.
Yeah, it's a great phrase. Would you say that phrase correctly sums you up? I mean, in terms of being a trader, because to me, you have to be able to humble yourself in front of the market, and that's what it sounds like you've just described.
No, I think there's a number of adjectives I suppose I could use, or descriptors, if I tried to summarize myself as a market speculator. I think risk adverse. I'm extremely risk adverse. I trade future. I've traded futures for my living now in a period of time that spans 6 different decades. And you think, my goodness, this guy trades the futures markets. But I'm risk adverse. I don't like risk. I don't mind losses, but I don't like risk. And so that would be one. And I would think another one is just I'm very inquisitive. I'm always asking questions of myself about, I've climbed down most of the rabbit holes in thinking through processes and thinking through matters of trading. I try to explore. I try to keep my mind open and always be thinking about things from a different point of view. So I think inquisitive, I think risk adverse, I think strong opinions, weakly held. They all apply.
And what do you mean by I don't like risk? Because some listeners may be puzzled by that.
Maybe a better way to do it is I respect risk. I know risk. I've seen it. I saw a lot of people come to the Board of Trade, buy a membership, and tap out. I've seen a lot of retail traders when I observed retail brokers, which was the world back in the 70s and 80s. You had retail brokers. I didn't enter orders by computer. Customers would call me. I did commercial customers. They'd call me. So customers call a broker enters an order, then wait on the phone to get a fill. So, but I always saw so many traders tap out that I've always kind of known that taking risk can build an account, but taking risk can tap you out too. And so I've really, from the beginning, looked at trading as something I wanted to do as a career, as opposed to necessarily I'm going to make a bundle in 5 years and buy a sailboat and sail around the world. I knew going in that I didn't want to do what I've seen other people do, and that's build up a big account and then end up broke. And so I've always kind of had this feeling that, a couple things. Making money in the markets, if you stay around long enough, is easy. It's keeping it that's difficult. That's what's hard, is keeping what you earn. And I had enough drawdowns that I don't particularly like having to make the same dollar over and over again. That's not any fun. It's not any fun to lose 30% of your capital and then have to do a 50% return to get back to where you were. And so I think always been aware that the markets can do a lot of damage. And so that you really have to watch position sizing, and you really have to make sure that you get, for me, stops in a trade, and you really have to kind of just be aware of the fact that while we take risk for a living, we want to take risk seriously. We do not want to be sloppy about risk. We don't want to view trades as a trade that I'm going to retire on. And so by being, I think, respecting risk as opposed to fearing risk. I don't fear risk. I don't fear losses. Losses don't concern me. I almost welcome losses as friends, although I show them the back door real quickly. So I want to be a risk taker, but I also want to be a risk manager. And I also want to have the main focus be one of bleeding risk out of my portfolio by managing trades properly, by sizing properly. I always want to be aware of the fact that that the markets can reward me, but the markets can punish me greatly if I don't respect them.
We'll return to the podcast in a second. What are you doing to improve yourself as a trader? At AlphaMind, we work with traders from across the markets, both professional and retail, and trading businesses to help people improve their performance. A focus on developing performance is one of the few areas that is very, I suppose you could say, under-practiced in an industry that is really a performance industry, and where developing key aspects, key behaviors, key mindsets can have a huge impact on how you work, how you perform, how you manage risk, how you increase size, how you maintain your sense of self in the face of uncertainty. Do feel free to check out our services as performance coaches. Go to our website, alpha-mind.net, to know more, or email us info@alpha-mind.net. Now back to the podcast.
Interesting. I think our journeys take a while though to realize, picking up the scent, picking up what to do. I mean, I imagine for you that couldn't have been on day one though. You must have had to sort of fade yourself into understanding, to be able to understand risk. I mean, did it take time? And once you've answered that, I've got another question for you from another one of the market wizards that we'll just expand upon that. But perhaps if you can just go back, I know because a lot of people are listening to us for guidance, people coming into the market. And a lot of them think they're going to have immediate success and it's just going to plug in as a game and off you go. But I'd like you to just sort of recall your very early journey and tell us how long it took you to kind of work it out, and what were the mistakes that you made that you think, I needed to make those mistakes. I'm glad I made those mistakes. I learned a lot from them. Perhaps we can just share some of that.
Well, I probably have only learned from my mistakes. I mean, and you made a good point about, the old guys, and I like to point out when I joined the Board of Trade, there were a lot of guys in the pit that were World War II veterans. They fought on Omaha Beach, for goodness sakes. A couple of them had bullet wounds to show. And so, but they'd have little sayings, and you guys have heard them all, the little quaint sayings that these old guys have about markets, and you just kind of hear those when you're young and go, whatever, whatever. I know that Jack, and I may have the number wrong here, but Jack has interviewed 71 or 72 different traders for Market Wizards. And, he once told me there may only be one or two in that whole group that hit the markets right away, hit them hard and never looked back. They were successful from the onset, and they never really were unsuccessful. They never blew up anyway. But the rest of them had to grind it out to some way or another. My first trade in futures was 1974. It was in bags of silver coins. This was prior to silver futures being out there, where the silver futures were traded in bags of pre-1972 mint silver coinage, U.S. silver coinage. But I really did not become profitable until 1979. Late 78, I would think. But 78, I think, as a net was a losing year. But it wasn't until late 78. And so 4 years, probably 3 completely destroyed accounts. I worked for Continental Grain and its Conti subsidiary for the onset. That's how I started the business. And they allowed us to trade our own accounts. We just couldn't run our customers' orders, front run them. But and so there was no problem. I wasn't restricted to the markets I traded. And so I was fortunate that I had some real big customers that were with me in the early days, where I'd get a fraction of a cent for every bushel of grain they traded. That's how I got paid. That's how I was earning my money. My goal was to be a trader, though. I mean, from the onset, my goal was to be a trader, not to earn fractions of a cent from customer orders. But so, their requirement is you had to have a $10,000 account. So I'd have a $10,000 account, blow it up, and another $10,000 account, blow it up. And you over time, you kind of, I tell people that from the day you start trading, you will not pick up the cent on what you're supposed to become for 3 years, right? 3 to 4 years. And in those first 3 to 4 years, you're just in the process of learning the markets and trying to be exposed to a number of different ways that you might end up evolving yourself as a speculator. And even the first way you start probably won't be the way you end. But you do have the desire to be a trader. And for me, it's futures markets. But it'll take a few. It's not going to come if you think you got the answers all at once. Forget it. You don't. And so for me, it really wasn't until 1978, early 78, that I even figured out charts would probably have something to do with what I was going to do in my life. So that's 4 years, and then another 2 years to figure out exactly how I was going to use charts in a way that would be profitable. And then now 50 years to evolve to where I am right now, and that's still evolving. It's still tweaking. It's still fine tuning. I still learn stuff every year. I learned something new about the markets. I usually learned it because I observed that there was something I didn't like about what I was doing or how I was doing it. And so how do you fix that? And even once you make a change in how you trade, it probably takes 2 years to figure out if that change was worthwhile or not. So it's a marathon. Guys that enter markets and think this is going to be a sprint, they're going to find out real quickly that it's not a sprint.
Indeed. So I guess I want to push on to this question from fellow market wizard Daljit Dhaliwal, who I think met you previously. So we got a question from him that sort of fits into this trajectory of, people thinking, well, the market's changed since, the days of the 70s and 80s. But actually, Peter, you said once that the more the market's changed, the more they remain the same, as a quote. So really, what principles have remained constant in, with your trading philosophy particularly? And what's the biggest changes that you've had to adopt to stay ahead?
I think at first when you come in, and it's a mistake a lot of people just coming in make, is that it's all about your trade identification. That's the magic. The magic is in that you're going to buy Bitcoin today or whatever, sell beans. That's where the magic is. I think there's that misconception that the magic is in the trades you enter, where I think you find out over time the magic is in what you do with the trade you enter. The magic is the trades you get out of, how you get out of them, and then the magic is in process. I like to. In my world, I kind of think of trades in buckets. There's trade identification, which includes, trade market analysis and so forth. And there's risk and trade management aspects. And then there's your mental aspects. Managing your emotions, a big one. We'll talk about that, I'm sure. But then there's the process. I think for me, there's two big things that I look back on my career and go, these were really, really cornerstones. One has to be process. As I found, it's the process you go through. It's the routines you go through. My goodness, let's say this coming Friday, a year from this coming Friday at 3:00 in the afternoon, I know what I'm going to be doing if I'm still trading. 200 days from today at this time, if it's a market open day, I pretty much know what I'm going to be doing. And it's the process of every aspect of trading in developing practices and processes and best practices and all that takes a lot of time. And so I didn't know that at the beginning. I think you find that out over time. You find out how important process is. You don't know it at first. Old guys tell you that at first, and you kind of look like a deer in the headlight. You don't really know what they're talking about. You may think you know what you're talking about. You don't have a clue. And so I think for me, that's just been kind of an aha moment. Is wow, looking back, and success really didn't have much to do with the fact that I was bullish on soybeans or bearish on wheat. Those were throwaways. I think the other one is the degree to which I have embraced the math, not just the process of trading, but the math behind trading, the statistics, the probability, and stuff like that. So for me, those I think are the things when I think back upon those things that have made the most difference to how I trade and how my trading goes. It would be those things. If I had another one, it would be the amount of when you start trading, you think you're a genius and your success will come from within. As you get older in trading, you find out that what's within attempts to sabotage you at every turn. You better not rely on what's within, because what's within is out to destroy you. And you've got to recognize that the characteristics that are part of who you are not exactly compatible with the success that you're looking for. And I think that would probably be another thing that just has been remarkable for me to see over and over and over again in myself and others.
Yeah, that's a great answer, and thank you to Daljit for sending that through. And I know he's a huge fan of yours. I used to coach Daljit, and he told me that he flew to Poland because he heard you were on a trip there once doing a talk somewhere. I think it was Poland, and
it was Poland, and that it was really cool for me, Mark, is that in Jack's Market Wizards book, he wrote it myself, and he would apologize at the same time that I had not been included earlier. And I think even in the book he talks about, the first guy we have in here is really not unknown, but I haven't written. I've never put him in, and I need to get him in here. And then the second thing, there were two guys in that book that really, Jack told me, I went to this guy's office here or there, and your books were in his shelf and your writings were on their table, and that really felt good. I really felt good about that. And I know that Jack's thinking about another book, and he's already told me that there'll be one or two more other guys that I have somehow influenced in their trading. And I feel good about that I've been able to maybe be of some value to people. But yeah, that was funny. I was in Poland for John Wiley, and it was part of the book they had released, and I was able to fly to Poland at their expense, which was a fun thing to do.
It might be quite heartwarming to realise he's flown over twice to see two people because of who they were. One was you, and the other was Ray Dalio. So.
Yeah. Ray's someone I greatly admire too. I'd understand that. Or Stan Druckenmiller, I'd fly anywhere to see him.
Oh yeah, absolutely. So listen, we're going to kind of thanks for answering that. We're going to move into, I suppose, the way we wanted to do this was not just to ask questions. I've heard you on some brilliant podcasts. The most recent one being the one with Riz Iqbal, which was fantastic, Words of Wisdom. And anyone listening to that, I do recommend to go and check that particular one out. And I remember listening to your one on Chat with Traders some years ago, and I kept listening to it over and over again because I thought, what a terrific interview. But we don't want to perhaps ask you questions in that style of a podcast interviewer today. We more want to kind of open this up to a little bit of a debate. So just to the listeners to understand, myself, Mark, and Peter, we've all been in the markets many years. Peter, some years longer than myself and Mark. So you're mid-70s. We came into it early to mid-80s. We also come from three very different places. You started off on the old commodities exchange, trading futures. Mark actually wasn't too different to that. He started as one of the first futures traders in London when the life floor opened. So he has experience doing that. And then he moved to becoming a broker, becoming the person who sits between, sort of groups of professional traders across a variation of markets. And so has a great understanding of, trading from both sides. And then myself, who actually came as a professional trader working at investment banks, and then sort of moved more from a market maker into a prop trader. So we've all got these three different angles, and it'd be great maybe to hear these questions in terms of these multiple perspectives from us. Perhaps more to have a debate than ask them. So we've set a number of themes out. Some of them you've already touched upon today, but the first one is really about this idea of the psychology of risk taking and how individual risk tolerances shape the way people trade, the way people deal with outcomes. For example, you've explained that you're a risk averse individual, and that probably shapes who you are. I know from Mark's personality that Mark's more of a more risk tolerant individual, more creative individual, perhaps a little bit more explorative when it comes to sort of trying things out and taking risks. And again, I'm probably more in your camp, more risk averse, very detail orientated, like having a system for getting in and out of trades, which to me was a combination of both technical analysis and my reading of markets, and that combination of the two within a structure of perhaps 3 or 4 different trading strategies. So within that, it's just to really explore, what within that idea of risk personality, and psychology of risk taking, what do you see as the classic errors traders make which lead to failure? And then what are some of the productive behaviors they do as well? And you've already touched upon, and perhaps actually just to change the direction, I'm going to put that question to Mark first, and then Peter, you come in and respond to that.
Well, if I go back to the first time I was told, okay, you've got a book to trade on the live floor, and I couldn't stand mathematics, so I was one of the very early chartists on the futures market in London because I liked art, and it kind of looked like I was doing art with numbers, and I was getting a sense of predicting, if that's the right word, market direction, and got a reputation for it. And there wasn't many of us in 82 that were chartists. I think 2 or 3 of us on the live floor. But anyway, I mean, I remember the first trade I did, I was absolutely petrified. I was utterly petrified when I worked out the notional value of it. Of course, in futures terms, there's, you trade 15 lots, but then you work out the 15 lots was worth, huge sum of money. And I was quite affected by that because I was focused on the trade. I'd not been experienced enough to really understand process and, what to do next and how to manage stop and, trajectory and targeting. So I think the emotional side was something that I was very weak on, in those days. Because I think, to be honest, it wasn't really, emotions and, men wasn't really a discussion back in the early 1980s. So it wasn't really a narrative to give you any clue. You were scared, and, tough luck. So I think that if I rewind forward and reflect back and think, okay, what would I do then knowing what I know now? I think process, and understand it takes time, foul and learn and those types of things, and understand that rather than failing and being absolutely petrified that I was going to have to explain things to somebody, when actually that somebody at the end of the day almost just said well done for the fact I'd just done a whole sequence of trades, on my very first appearance as a trader. So his experience was saying, the fact you've done it and you'll learn from that was important. So yeah, that's my little thing. So I imagine, Peter, you had a similar type of experience when you were a floor trader as well. I mean, the most difficult thing about being a floor trader is you suddenly realise you've got to be shouting at the top of your voice in a very, very big room, and that alone scares the hell out of you. Never mind the trading bit. But anyway, Peter.
Yeah, I mean the pit was like vicious, right? Going into the cave with animals, especially in fast market, which
absolutely. Well, yeah, absolutely.
Yeah, I mean, which is something people don't understand even. I mean, that's kind of the old concept, right? That the exchange would actually declare a pit to go into a fast market, and the rules changed then. The rules in the pit changed when fast market light was on. But yeah, but the reality is most guys in the pit, Mark, as you know, they weren't positioned. They weren't trading for the next tick.
Yeah.
Right. I mean, there were most of the money being made by guys in the pit were being made by guys either filling orders. They were taking orders from Merrill Lynch and other brokerage firms and then executing the orders in the pit for as pit brokers, or they were guys that were trading the bid after a spread, which now would be considered liquidity providers, right? That's what they were. They buy the bid and sell the offer, and they'd make the market, and then they competed for niches within then. Who's gonna make the market for March corn? Who all is gonna do it in July? Who's gonna be the sell side of July? Who's gonna be the buy side? And so the market the pit would reorganize based on things like that, as you remember, Mark. I mean, there are guys filling orders, few guys trading on the top of the step for themselves for 5-minute time frames. But, most everybody yelling and screaming that you see in the films were guys that were there for the next tick. They were next tick traders.
We will return to this podcast shortly. Just a quick reminder about our podcast sponsor, the Society of Technical Analysts, a brilliant organisation which help traders and analysts from across the spectrum of markets. They have many fantastic programs, including the new Technical to Trading System program. Also, do check out their brilliant home study course, and AlphaMind listeners can get a discount on that. Just go to our website, alpha-mind.net, to find out more about that. You can find out more about the Society of Technical Analysts by going to their website, technicalanalysts.com. Now back to the podcast.
That's you probably saw things even from a different angle, Stephen.
Yeah, well, I was trading in the pit but I wasn't even on the floor. I was doing it down phones to brokers. I was watching the prices on the screen inside a bank, and I'd see stuff that I felt was overextended or had further room to go. And sometimes it was a day trade, sometimes it was longer than the day trade. But it's interesting because you bring up, for me, hearing both of you, something which I talk about in my book, which is the idea of a house trader and a player trader. And the house trader is the individual who sits there adding liquidity to the market and using their position inside the market to really try and monetize their position in the middle of the liquidity and adding liquidity and being a provider of liquidity, which wasn't really a place I ever was. I was always someone a little bit like you described it there on the top step, trying to be someone who looked at the liquidity from the outside and tried to trade it, putting some direction in, whether it's for short term or long term, and therefore for me understanding where you are in that, there's going to be different ways that you take decisions, different ways you run risk. So, for example, in the world I was in as a bank trader, most of the people around me were market makers, and in their own way, they were adding liquidity to the market and trying to capture liquidity in a different form but in the same role that you were doing, and then trying to hedge it with the guys on the floor. Now, I hated that. I hated other people hitting me with their risk, and I had to try and hedge it and try and capture a spread. I wanted to be the person who took the risk, whether I wanted to be long or short, which it sounds a bit like that's what you were trying to do, Peter.
Well, I think eventually it was, well, I mean, I didn't know what I was trying to do. I mean, that's the problem, right? Is I didn't have a clue other than I thought these guys that were working 4 hours a day and living in Lake Forest and Wilmette had a pretty cool life and independence and so forth. But and so I asked my wife the other day, what did I tell you when I decided that I was just going to up and quit what I was doing and go to it? What do you remember even what I said to you? Why was I doing it? And she goes, I can't even remember. I thought it was crazy. And she's probably right. But the interesting thing that what you said, Stephen, really caught my attention was that all of these little, I am in awe when I meet guys that have really made it as their career in trading, because you know they have solved hundreds and hundreds of problems, that they have lived this life that is just constantly trying to dig deeper into little problems they have, and they get over a hurdle and they think it's clear running, and they run 5 yards and they hit another hurdle. Then they got to solve that one. And they're solving problems about so many different dimensions and dynamics of trading. And that's why I just have this deepest respect for guys like you that have solved all the problems to be able to extend in a career in market speculation. It is a steep wall. It's a steep wall to climb because you don't do it without solving problems.
Yeah, I would never say I solve problems. I just remember a little bit like Mark explained just now when he started on the floor and he said, oh, what do I do? And he just tried it and he threw himself in there, which may be that more creative, risk-taking type that you are, Mark. I had to sit there and try and think, what the hell am I doing? I have no clue. And I think in a way, that's what everyone starts with.
I think so. Yeah. No, I think you're right. But there's so many niches. I mean, I know no two people who do it the same. I mean, there were no two people at the Board of Trade that were making a living doing exactly the same thing. And because it all ended up somehow trying to dovetail with what their strengths and weaknesses were. And there were guys that thought of markets in imagery. There was guys like me that wanted spreadsheets and charts, and there was other guys that were. I mean, there was even a guy in the wheat pit when I was there he was blind. He was a man that was blind, and he was a very successful trader.
Wow.
So and he traded based on what he felt was the mood of the pit, the noise of the pit. I think you guys probably remember those clacker trade boards, right? With the clacker, mechanical clappers. Those were wonderful when I'd go upstairs and trade off the 15th floor sometimes, because you could sit at your desk. You knew what the market was doing based on the clack rate. The markets would really start clacking, and you knew, hey, you're going into a fast market in beans, and you like get the clacker board, and the red light would be on, telling you you're in a fast market, and and that's how you can pick up sentiment just in terms, if you get a click every time there's a price change in a market. If somebody could convert quote machines today, and they probably have it, that give you a click whenever S&P's trade prices, you could go out and make a sandwich and turn the sound on your computer and know what the market was doing. So yeah, it was a strange world back then.
Yeah, but it was. Do you think in a way it was better because we were in the pit, we were the price. We were the price. We were the thing that went up on the screen. And I think you're quite right that you had a sense of what was going on. You could feel panic. You not just see it, but you could see it building up. And of course, I think that's quite difficult nowadays because you kind of see the effect of it. But I mean, the fast markets of the past, I mean, my God, there were days when you had multiple fast markets where, and just give the listener a clue, where the pit observers declared it fast when they couldn't track what the price and bid and offer was at that point of time. And basically, there were multiple prices going on. and that time. But I think we had a privilege of being plugged in, and we had our finger on the pulse, very much on the. Although we didn't see news really, they were on these screens in the corner. You had the news, but you kind of had a heads up about momentum shifts and
I think you're right. I think that we had a huge advantage over guys sitting in their mom's basement with a laptop today, right? Yeah. Because we had the opportunity to see how price was discovered. Because after all, that's really all a commodity exchange is, or now the computer print screen is. It's price discovery. And, people now just see the clicks, they see the trade, and they see the change in their computer screen, where we had the opportunity to see all the dynamics that took place to give a market what it was getting, to see the price discovery in action. I don't know if that necessarily results in having it be an advantage to me today in terms of what my profit and loss is on my next trade. I don't think it has any impact on that, quite frankly. But I think it does give me, it paints color for me. It gives me a more colorful vision of what market behavior really is. And I think I just appreciate that. Whether it results in profits or not, I think I appreciate it.
We hope you're enjoying this interview with Peter and this three-way dialogue that we're having today. We are going to bring this podcast to a close. We have specified that it was a long interview with Peter, and we'd rather capture it as two separate interviews. So we are going to have the second part of the interview coming on in a couple of weeks' time, and it builds upon the discussion so far. So we do thank you for listening today. We do ask you to join us in a couple of weeks' time. A couple of reminders. Our podcast partner and sponsor is the Brilliant Society of Technical Analysts. Do check them out, technicalanalyst.com. And if you want to know more about their home study course, you can, of course, get a discount on this. Just go to our website, alpha-mind.net. Do feel free to sign up for our newsletter. And of course, if you're not aware of it yet, I had a book published last year called Mastering the Mental Game of Trading, which really goes deep into this journey of how it is to be a trader and some of the challenges we face, and how you can resource yourself more effectively in the face of these huge mental challenges that impact us and affect the way we work in markets. So do feel free to check that out. That's available on Amazon and all good bookshops. The name of that is Mastering the Mental Game of Trading. So please do join us in a couple of weeks' time for the second part of this interview. Thank you.